Hi, welcome back to Chapter 10, Purchases and Cash Payments in a Perpetual Inventory System. We are moving along to Learning Objective 10.2, where we're going to journalize, record, and post cash payment transactions and prepare a schedule of accounts payable. Here are some transactions we're going to go through. A closer look at how April 14th transaction would be journalized. So going back here, April 14th, issued a check number 4 to Thorpe Company in payment of its April 6th invoice, less the return and a 1% discount. So in the last example, if it was paid within 10 days, it got a 1% discount. So we're going to be taking advantage of that. So we're going to be paying cash. So we're going to be decreasing cash, which would be a credit to cash. We are getting a discount. So our inventory price would have decreased. So we would credit inventory for 1% times $600. And our accounts payable would be decrease, so we would debit it. You can see we had a liability on the books when we recorded the invoice. Now we're paying it, so we're getting that liability off of our books. And the same in our subsidiary ledger, specifically for Thorpe Company, we're reducing that as well. So here's our journal entry listed below. Moving along, here's a complete set of the journal entries that we're doing for the month. Whenever we're paying our accounts payable, we would reduce the subsidiary ledger and the general ledger. Hence, there's two accounts here. They're posting reference, and you're reducing your cash. You're paying that out. Here we bought some more inventory, so we're increasing inventory, crediting cash. And then here we're paying Thorpe again, so we're reducing cash. This is the journal entry we just went over on the previous page. And then here we're paying out our salaries. So again, a look at your subsidiary ledgers. Compared to your accounts payable ledger, your balances should remain the same. This has a $7,130 balance. If we added up the $5,650 and the $1,480 balance, it should agree to that $7,130 balance. Okay, so a schedule of accounts payable is proof that the sum of the accounts payable subsidiary ledger is equal to the controlling account. Only creditors owed a balance appear in the schedule. If it doesn't, the journalizing and posting recording must be checked. So, just to make sure, these are our subsidiary ledgers, so we'll do a schedule and say, Abby Blake, this is their balance. We don't put ones that have a zero balance. John Sullivan, this is their balance. And make sure it agrees to the controlling account here in your accounts payable general ledger. Okay, so at the end of the month, the total owed is $7,130, and the accounts payable should equal the sum of the individual creditors that are listed on the schedule of accounts payable. So we list those two, as I stated, from the subsidiary ledger and get our total amount. So should be simple enough, and that should agree to our accounts payable amount. So that concludes Learning Objective 10.2.